Good morning, everyone. My name is Richard Ponte, and I'm the Director of Events and Programs for the Maine State Chamber of Commerce. And on behalf of the entire team here, it is my pleasure to welcome you to the first of two webinars on paid family and medical leave, the latest in our webinar series. Thank you so much for joining today. Before we get going, there are just a few things we'd like to share with you about today's session. If not presenting, please turn off video. This meeting is being recorded, and we will make the recording available to you on our website in the next few days. To reduce background noise, all participants will stay in listen-only mode. Please stay on mute to reduce noise. And please submit questions into the chat panel addressed to everyone. Time permitting, we will answer them by the end of the session. And we will use the chat function to share useful links and other materials. Finally, if you lose connection, please use the same Zoom link to reconnect. And we would now like to beginning by thanking our sponsors. Our premier sponsor this morning is Cross Insurance. Our presenting sponsor is Unum. And our 2024 webinar series sponsors are AARP, Central Maine Power, Northeast Delta Dental, Kennebec Savings Bank, and Sun Life Insurance. We'd like to start by sharing a message from our premier sponsor, Cross Insurance.
What is insurance?
Sure.
Insurance transfers certain risks between parties.
Without insurance, the economy would really stop.
In simple terms, insurance is like community.
It's protecting every last asset that somebody has built over a lifetime.
You're in it together. You feel supported.
From the beginning to the end.
What insurance is just taking care of people. It's definitely a way of life.
So again, thank you to all our sponsors and specifically Cross Insurance for their premier sponsorship today. It is now my pleasure to introduce Jacob LaChance, who is a government relations specialist with the Maine State Chamber of Commerce. Jacob will be leading and facilitating the conversation today. Good morning, Jake.
Good morning, Richard, and thank you to everyone who signed up for this webinar. I think this might have broken a chamber record for attendance with over 200 folks that signed up for this webinar. So thank you so much for all of your participation. And thank you for your attendance today for part one of our two-part series on paid family and medical leave, a presentation on what other states have done and are doing in their implementation processes of their family leave programs. Next, I would like to introduce our presenters for today's webinar. First is Umberto Speranza. He's Unum's Assistant Vice President for Government Affairs. In this role, he engages with lawmakers and public officials at the state and federal level by advancing and defending the company's legislative, regulatory, and public policy agendas. He specializes in top policy issues impacting the benefits industry, such as paid family and medical leave, and other key products and priorities across the nation. Joining Umberto will be Unum's Director of Products and Market Development, Kristen Fluitt. Kristen has led Unum's efforts to build paid leave products that satisfy state statutory paid family and medical leave program requirements for equivalent plans. And last and certainly but not least is Sarah Montgomery, Assistant Vice President, Paid Family and Medical Leave Implementation for the American Council of Life Insurers. The American Council of Life Insurers is the leading trade association driving public policy and advocacy on behalf of the life insurance industry. 90 million American families rely on the life insurance industry for financial protection and retirement security. ACLI's member companies are dedicated to protecting consumers' financial well-being through life insurance, annuities, retirement plans, long-term care insurance, disability income insurance, reinsurance, and dental, vision, and other supplemental benefits. ACLI's 280 member companies represent 94% of the industry assets in the United States. Thank you so much to the three of you for joining us this morning. And with that, I will turn it over to Umberto.
Thanks, Jake. Just a quick welcome from me, and I'm going to pass it over to Sarah Montgomery to get things started. We're really happy to be here today. I think for two reasons. Paid family medical leave, of course, is core to what Unum does and what ACLI member companies do in the marketplace as leading disability insurers, but also of course, we're talking about our home state of Maine, and I'm a proud director on the board of directors of the Maine State Chamber of Commerce. So we are very pleased that you are elevating this issue today, and we look forward to kind of looking back. We won't look forward so much. I know many of you are anxiously waiting what this means for Maine and what the next steps might be for Maine, but we're really going to focus on what other states have done. What have we learned, and what kind of expertise we hope to share with all of you today from those implementations around the country. So with that, we can head to the first slide, Richard, and I will pass it to Sarah to kick things off.
Thank you, everybody. And just to build a little bit off of what Jake mentioned in his introduction, I work for the American Council of Life Insurers. I joined in 2022 with a newly created position to help our member companies specifically manage issues around paid family and medical leave implementation. Since we are hitting in 2026, we have 4 new states coming online. So there is a lot for us to do with these new states, but also we have, as Umberto mentioned, learned a lot from the states we've been working on since 2020 with Washington State and with New York in 2017 as well. So to get started, just to give you a little bit of, we're going to start a little bit of background on kind of where we've been over the past few years with leave and kind of what brought us here. So looking at this list to kind of dive right in, there's 15 states plus the District of Columbia that have some form of PFML program. And within these 15 states, there are a few different types of programs, and bear with me because the differences matter as between the evolution of what brought us from statutory disability now to PFML programs. There are statutory states that have statutory disability states. So states that had mandatory statutory disability, so not workers' comp, but the capacity for an employee to take leave for non-work related injuries. And those states later added PFL, so caregiving leave, to those programs. So they're a little bit different than the states we're seeing now. The first states that did this were California, New York, New Jersey, and Rhode Island. Hawaii is a little bit different. They have a statutory disability program only. However, in the last several legislative sessions, they have been very active in introducing efforts to add paid family leave to their program as well. So we expect to see that coming in the next few years. The second group are PFML states where there were no state disability programs to build off of. So these states enacted PFML statutes that were generally modeled on the Federal Family and Medical Leave Act. And as Umberto will mention as he goes through things, you really do need to say generally with all PFML states because the permutations in each program are different, so that it really is, there are some broad things that are common among all programs, but when it gets down to details, they really are different programs in many ways. So, but the next group of PFML states were Washington State, Washington, D.C., Massachusetts, Connecticut, Oregon, Colorado, and then our 26 states with Maryland, Delaware, Minnesota, and Maine. And then finally, there are 2 states of what we refer to as voluntary programs. These are states where there is not a mandate on employers to provide paid family and medical leave. However, in an effort to expand access to the benefits, the states made the decision to use the state employees as the basis of a risk pool, which private employers and employees can purchase PFML coverage on a voluntary basis from the state plan provider or other providers in the market. So again, it's a little bit different since it's a voluntary program, but it's another means of looking at expanding access. And those 2 states are New Hampshire and Vermont. We can move to the next slide, please. So just to give you a little more kind of visual context for what I went over in the last state, the statutory disability states started in the 1940s when Rhode Island, California, New Jersey, New York, and Hawaii didn't come online until 1969, had statutory disability programs. Several of these states, as I mentioned, added paid family leave, so caregiving reasons, to their programs in the 2000s. And then you can really see the transition to PFML again, modeled more along the lines of Federal Family Medical Leave Act leave. The expansion of these programs significantly beginning in 2020 with Washington State down through, again, our 26 states, including Maine. And so, Umberto, I want to turn it back over to you to talk a little bit about what's coming up in the future.
Great, thanks, Richard. We can head to the map, and we are going to quickly touch upon the national landscape and continuation of Sarah's comments, and then dive right into what you all came to listen to today, which is what are the key topics of implementation, rulemaking, and regulation in those other states, and how that might translate its way to the main process. But very quickly, you can see these two shades of blue. The West Coast and the East Coast are pretty much nearly covered by paid family medical leave at this point. You only have the two outliers in the middle of the country with Colorado and Minnesota. And then what you see across the South and the Southeast is what's called the Paid Family Leave Insurance Act. And that is not so relevant for all of you tuning in from Maine, given that Maine will be a statutory state come 2026. But these other states that have decided to go a different route, a voluntary route, are really embracing paid family leave as an insurance product. And that's what you see there. A couple of interesting nuances Sarah mentioned. There's varying degrees of private plan participation across all of these states for a lot of reasons. Some is due to the historical nature of the programs. You know, Sarah showed you how some of these programs have been online now for more than 2 decades before the market was really mature and robust in the PFML space. Some of them is due to competitive dynamics, market dynamics, different rules and regulations that make it more or less viable or competitive for private plans. And then you have a couple, Washington, D.C. and Rhode Island, that simply don't allow for private equivalent plans. But in the case of Maine, of course, the statute does allow for private equivalent plans, and that will be a part of the rulemaking and regulatory process that the DOL engages in. So a lot more to learn as to the specifics of private plans with Maine in the weeks and months to come. But Richard, let's head to the timeline real quick to give everyone a sense for how long these buildups take. You can see that we're well into 2024 already, with Oregon and Colorado having been the last 2 states to come online in late 23 and early 24. You'll notice that it's the first time in history that we have 4 states going live in 1 year, 2026. But you'll see the caveat I have there below regarding Maryland. We expect with near certainty Maryland to delay their program. That's really, they were very transparent. It was about their ability to find the right technology and leverage existing state infrastructure networks to stand that up, and they simply need more time. You have 2 states beginning contributions on 1/1/25, Delaware and Maine. And then you have across 2026, Delaware, Maryland, Minnesota, and Maine on various start dates, with Maine right now being the latest, May 1st, but Maryland, of course, is if delayed, is going to impact that a little bit. What we wanted to show you here is really the life cycle of a PFML program from when it's passed and enacted by the legislature, in the years, sometimes 1.5, 2.5 years that pass between that bill becoming law and benefits getting paid. And everything that happens in between is what I'm going to pass it over to Sarah for a little more detail on right now. Next slide's good, Richard.
So thanks, Umberto. As Umberto mentioned, there's, he showed you the timeline. There is a life cycle of how these programs work and how they unfold. We just wanted to spend a little bit time talking about which pieces are created through which stage, and then kind of how long it takes for these processes to play out in the intervening time between when the statute was enacted and then when the program goes live itself. So we're going to step back one step into the statutory stage. So the PFML legislation itself. And now that it's enacted, there are, I kind of like to think of it as a house analogy, that the PFML statute is like the framing of the house. It provides the bones of the program and allows, what happens in regulation to put meat on the bones. But the PFML statutes and that we've seen across the states are generally comprehensive as far as the big ticket items we call within a leave program. So the leave reasons, whether it's own medical leave, bonding leave, care for a family member, those are traditionally typical across all programs, but some states will offer additional leave reasons such as safe leave or organ donation leave. So again, policy choices that are made by lawmakers about what to add go into the leave reasons and into the statute. The durations, whether they are 12-week programs, 20-week programs, 26-week programs, are outlined in the statute. The benefit formulas are also laid out in the statute, whether what we're seeing now typically are sliding scale. So progressive benefit formulas that allow higher income replacement for lower income workers with reduced income replacement across higher income workers up to a statutory maximum. The broad outlines of claim processing timelines and the expectations for when employees inform employers of their need for leave, when they apply for leave, when the employee then has to provide documentation to back up their leave application, how long they have to do that, and then the timelines for when benefit payments are due are all usually typically laid out in the statutes as well. The statutes provide kind of rules for the road as far as state plan administration. So how the state plan will take in contributions, when they will have to report to the legislatures, how they will run their program is laid out in the statute, as well as rules of the road for private plans. Maine is one of the states that allows for both self-insured and fully insured options. And the broad outlines of the rules around how an employer can select a private plan and complete an application, the documentation they will have to provide to the state to ensure that a employer is using an approved carrier who has filed and been approved for to provide leave benefits within the state is all part of the statute as well. There are reporting requirements placed on the state plan and the private plans that are typically provided in statute, as well as rules around the provisions around the administration of the program itself, how it's structured, whether there is an advisory board or an accompanying authority that helps the department itself. Kind of, it's a stakeholder group generally that helps inform and advise the department on how to develop their program, and usually rules around appeals. So if a benefit is denied or if an employer is turned down for a private plan, the statute will provide parameters around how to appeal those decisions as well. Richard, we can move to the next one. And after I get through these 3 slides, we will pause for questions. So I know it's a lot to take in, but at the end, this will make more sense when you're when we go through all the phases. So hold your questions, but we will have time for them. The stage we are at now, now that the regulation, now that the statute is enacted, is the regulatory phase. And in Maine, you are currently in this state, along with the other 26 states who are all writing regulations now. Everybody's working on it. So it's an exciting time to be in this space, to really dig into these and help the states work on their regulations and provide feedback along with all of the other stakeholder groups. But the regulations provide a lot more meat and structure to the framing of the house. So the plumbing goes in, the drywall goes in, the roof goes up. This is all of the things that the regulations will provide detail on. So much more specifics on the employer registration process. Generally, employers have to register with the state so that they, whether they are opting in or out of a private plan, and then whether, excuse me, depending on their size, if they have a waiver or an opportunity to opt out of a program, they would still need to register and provide documentation for that. There's also more information on the contribution process for employers, when wage reports are due, how they're provided to the state, and then how reporting would be, other reporting may be due to the state as well. Excuse me. There is more information provided on what is an eligible employee, whether there is a financial eligibility test, a service requirement in order to be eligible for leave is all outlined in the regulations, as well as details on how an employee who may be eligible for a waiver from providing contributions to the program, how those may be filed. Excuse me. I apologize. And then finally, rules around self-employed individuals, how they are may opt into the program and the timelines around that, since typically there is a length of time associated with self-employed individuals for how long they have to pay into the program. There are extensive private plan provisions around how private plans work, again, to make sure that private plans are offering the same benefits or exceeding the parameters set out in the statute, and how employers, how they opt out, as well as how insurance providers work with the employers and with the state to ensure that benefits that are the same or better than the state would pay are administered in a compliant manner that aligns to the state standards. Claims processes are laid out, again, with more detail about the contents of claim forms, documentation that needs to be provided to support a leave request. Are all spelled out in the regulations. Dispute resolution and appeals processes are built out, again, with the goal of quickly reaching any resolution of any issue that came up with the benefit payment or an eligibility for a leave. Since these are relatively short-term benefits, it's really helpful to try to have these issues, if there's any confusion or dispute over a benefit, appealed and resolved quickly. Excuse me. And also job protection, anti-retaliation provisions are addressed in the regulations as far as the rules of the road around when job protection begins. Again, if there's a duration of time that an employee needs to work for an employer before they would obtain job protection, and then what protections there are for employees if they seek leave. If there were any questions of retaliation for requesting leave, those would be addressed in the regulations as well. And finally, regulations will lay out penalties for things like late payment of benefits or late failure to send timely contributions to the state for coverage. That would all be laid out in the regulations as well. So we can move to the next. And then finally, as the departments are building their programs, there's the statutory phase, the regulatory phase that puts meat on the bones, and then to build one more step on kind of a house analogy, there's what we call department guidance, website guidance, FAQs, or kind of landscaping and all of the things that really build it out and to make the house, put all of the bells and whistles and turn this into a program that is easily accessible for people, understanding that resources for employers, employees, and self-employed people are critical to help them understand and access the program. While I read regulatory language every day, I struggle with it constantly. So as somebody who does this, I really do understand and appreciate all of the effort states make to reduce very complicated concepts into very accessible information through their efforts to create things like checklists, so employees know exactly what's expected when they start the application process, what they'll have to provide, and the timelines, and things like letting them know more information on the notice they have to give to their employers about their leave. The departments will also produce process documents for all kinds of, depending on whether it's an own medical leave or a family leave or one of the other types of leaves that we've discussed. Documents and videos will be available. Benefit calculators are very helpful to help employees plan for what portion of their income will be replaced and what they will be receiving as a benefit from the state while they're on leave, to make sure they can plan and understand exactly what level and portion of income will be replaced, since it's often, as I said, on a sliding scale. Everybody won't receive the same benefit. And then provide the benefit application portals, which are, now that we're turning into a more virtual world, allowing employees to go online and create accounts, upload documents, and to get information about their leave electronically versus through paper. Again, these portals will take a long time to build out generally, but some states have gone 100% electronic. Some have a hybrid mix of paper and electronic, depending again on the employee's needs. And then application forms will be available on websites, which help employees get the process started. And again, FAQs, which are slowly, Maine has been started to build them out on their site and will be developed more. All states end up having them and really help answer specific questions that come up through any number of stakeholder meetings, different webinars that the departments will hold on to really help make sure that they are broadcasting as frequently and as often as they can answers to questions that come up along the way, because there will be many. And then I just wanted to, Richard, we can move to the next one. Thank you. So just to wrap it up a little bit, it's kind of the same information, but just presented a little bit differently. There's generally 3 phases to implementation. Now that the statute's been passed, phase 1, we are typically, each state approaches statute and regulations are in place. Phase 1 will be the communication outreach to employers that will be critical to helping educate employers about the contribution process and how they register with the state. And during phase 1, as with every phase, there's a technology build that has to begin to register employers, intake contributions, and to start building the backbone of the technology that will administer the program. As I said, registering employees, collecting contributions, and promulgating regulations will also is kind of like the phase 1 meat of the work that's getting done, which is where Maine and the 2026 states find themselves now. Phase 2 is additional communication and outreach to employees. This is typically the year before the program goes live, to start really educating employees about the program, about the processes, about the types of leave that are available, and how to work with their employers to request leave. Again, more technology building, depending on claims administration processes, and again, public-facing websites and technology to make the employee journey through this process a little easier by accessing websites and portals to apply for benefits. Claims administration is built out, and private plan opt-out processes are generally being finalized and executed throughout phase 2, where an employer will work through a process to potentially opt out of the state plan and then perfect their application into a private plan. And then finally, phase 3 is when the program goes live, which will be 1/1/26, and benefits will start getting paid. Inevitably, there are some process improvements, as there is with any kind of startup process, that get ironed out as the program continues to mature. And this is the phase where we start to see reporting. So you start getting feedback and data from both private plans and the state plan on the performance and usage of the program itself. So very exciting roadmap you all are embarking on. And I will stop there and be happy to turn it over to Umberto if he's got any additional comments or take questions from you guys.
Yeah, I think we'd love to take a few questions about anything you've heard so far before we pass it over to Kristen to give some more specific details around private plans and the states that are already in force. But let's wait and see if we get any through the chat.
Yeah, I think our first question has now come through. This is from Louise. Are you aware of any communications in the technology build discussions that address having an app so that claimants can file claims via smartphone? Some Maine households don't have laptops, desktops, or internet access.
Sarah, maybe you can share what the portal experience is in some of the recent states, maybe Oregon or Colorado, but I think generally there's 2 ways to answer this question. Luis, of course, the state plan and the private plans are going to have a different answer to this, because private plans are going to adopt and enable their existing capabilities as if you were just a regular insurance customer. But I'll pass it over to Sarah, maybe to talk about state plans that have done something similar. One second, we're just having a audio. There we go.
For a minute, I apologize. Umberto, I got cut out. Sorry, their phone came through, so it messed up my microphone. But yeah, there will be each state, depending on their technology build, will try to offer a series of ways for employees to access their benefit portals. And the states that we've worked in really do try to meet employees where they are versus require the employee to meet them where the state finds themselves. So I would expect there would be a range of options as the states have implemented to do some. There are some people who do require still phone application, allowing access to that, as well as capacity to do it by phone and by on a mobile device, or to use laptop if they had access to one through a library or a friend, again, since there are sometimes documents that need to be uploaded to accompany a application.
Great, thank you for that. Second question is this applicable to all businesses regardless of the number of employees? And I think this probably speaks to the main kind of specific statute where that's lined out, if you want to maybe touch on that briefly.
Yeah, sure. We'll try to keep it high level and kind of give overarching experience, but this one's pretty easy because, as Sarah mentioned, that's one of the things that are dealt with in the statute. Maine is a nearly universal state when it comes to applicability of the law. So that is, all employers. There is a exemption from contributions if you have less than 15 employees. And of course, self-employed individuals are treated differently. But that is something that is different state to state. There's different thresholds. Maine chose to go this way via the legislation.
And then I think the third question here that we have, we are nearly a third of the way through the year. Is the Department of Labor on schedule comparative to other states? And what will happen as far as contributions go from employers if the rules regarding private plan opt-outs are not in place?
It's a good question, Peter. I think perhaps we have an example, given that there are 4 states, but keep in mind that Maine is the last of those 4 states still. So Maine has built itself a little buffer to May of 2026. States do this in different ways and on their own timelines. I think the Maine Department of Labor has made it clear that they intend to release a draft rule late May, early June. Sarah, anything you want to add in terms of general timelines and where Maine fits into that process right now? And then I'll touch on the private plan question.
Okay. I think the timeline, we have, all of the stakeholders will work with the state when draft regulations are released, and that we have, knowing that there's kind of a group commitment to move everything forward, we're in good shape. We're ready to work with the state to update regulations in the same way that we have in every state, or to provide feedback. It's, again, these are the state's regulations to promulgate, but the good news is we've gotten very good at this over the last few states. So we're looking forward to seeing the regulations and working with the state to, do what we can to provide feedback along with the rest of the stakeholder groups. So I think we're in good shape.
Jake, the second half of Peter's question and Virginia's question are, I think, more or less the same regarding what the private plan exemption and opt-out regulations look like. And then to Peter's question, what happens as far as contributions if rules aren't in place? And there's been examples of that in other states. Every state has done this differently. They've treated private plans differently. And of course, timelines vary from state to state. I think generally there's a process that has worked in recent years in some other states in which if rules aren't 100% in place, or if systems aren't 100% ready to go, there's something called a declaration of intent. And then there's a formal process. Again, that is for the department to decide if they want to go down that route, or if the rules aren't 100% complete. So we would have to defer to them, and luckily that's a good plug for the webinar next Monday the 29th, in which you'll hear directly from them about how they're thinking about this right now. But I will pass it back to Sarah, maybe Kristen, if she wants to jump in on any other additional context from other states' private plan exemption regulations.
Yeah, I would just share that in Massachusetts and also in Oregon, there was not a process just in terms of what that defined opt-out process looks like. They implemented that approximately like 6 months prior to the contribution go live date. And in some states, we haven't seen that defined until about 3 months prior to the contribution go live date. And so as Sarah had mentioned earlier, just as an industry, we are positioned to be able to pivot and respond if there are any potential delays when the states are rolling out the rulemaking for private plans.
Great, thank you so much. And I think the one maybe final question that has popped up in the chat: Maine paid family and medical leave payroll deductions are slated to start 1/1 of 25, as most of us know. Do we know what the cost per employee will look like?
Another specific one that I think you'll learn a lot more about as the rules are released and these details are finalized. I think we'll tell you what we do know from the statute, which is there's a statutory cap of a maximum of 1% of wages. Of course, it doesn't mean it has to be at the statutory maximum of 1%, but that contribution rate will be defined by the department as they roll out the rules and regulations. So a little early to give you a specific cost per employee, but I think the beneficial thing from the statute is that you at least have a ceiling for the time being that you can think about, and then wait for the specifics.
Awesome, thank you. No other questions currently in the chat. Maybe wait a couple moments just to see if any others trickle in. As Umberto mentioned, there will be a part 2 to this series next Monday, also at 10 a.m., which will include input from the DOL about Maine-specific rulemaking process. And I know a lot of these questions obviously are pertailed to them. And I know Umberto and Kristen and Sarah have done a really good job outlining things from maybe more of a 500,000 foot level, just with what other states are doing and how that could have some bearing on the process Maine is going through. So definitely want to thank them for giving that overview about what other states are doing. Are there any other questions that people would like to pose through the chat?
Jake, in the meantime, maybe we still have 20 minutes. I'll just add, this whole process is really a partnership between Maine businesses, employees, the Department of Labor, of course, the new leadership running the PFML program, but also the Maine Bureau of Insurance, specifically to private plans. So ACLI, Unum, other carriers work really closely with those groups in other states, and of course, we'll do the same in Maine, because you can't have a private plan unless it's an approved private plan, and that's an insurance product. So those two groups will certainly work together and make it more beneficial for all.
It's definitely a unique feature of PFML programs is that there are two agencies at issue here, but they have always communicated, worked well in every state we've worked in to approve private plans. So there are insured options in the marketplace that are approved in time for when they're approved, so that employers can perfect any kind of private plan application by the time the program goes live. So there really, a lot has been learned in the last 10 years since 2020, which is great, since Maine and the 2026 states really get to benefit from everything we all have learned collectively, from Washington State through Colorado's implementation on 1/1/24.
Absolutely. There are a few more questions that have popped up into the chat in regards to the question about the recording for next week's meeting. Yes, that will be recorded and that will be put out publicly for those that won't be able to attend. Same as this. This is being recorded and will be sent out afterwards. And you'll be able to find that on the Chamber of Commerce website for any playback that you wish to have about either of these webinars. And just rolling through some of these questions, I apologize, I was late. Is there a minimum number of employees needed to participate?
We'll hit that one quickly. I like the rest of these questions. These are getting great. Thanks everyone for your participation. For that one, Julie, we briefly hit it. The statute makes this pretty universal for Maine employees. There's of course self-employed individuals have the ability to make themselves available to this leave, and then employers with less than 15 have the contribution waived at the employer level, and then 15 and above is all inclusive, and there will be some sort of cost sharing arrangement, again determined by regulation between the employer and the employee.
Secondly, do you have a sense of when the rulemaking process will have a public comment period, and then any suggestions on strategy for that process? I might just speak maybe quickly to the first part to maybe let you guys off the hook. That might be a part 2 question for the DOL in terms of when they plan on doing that rules making process. I know obviously a part of that there will be a public comment period. The timeline for that has kind of yet to be seen, so they might be able to give us some insight in part 2 of the webinar series. And then any suggestions on strategy for that process. I don't know if you folks want to take a stab at that.
Very quickly, and I know Sarah and I actually just recorded a podcast about leave. I know it's very exciting stuff that you want to listen to on your car ride home. We talked about empowering employers to be engaged. That's simply what I would say. No specific strategy. Be engaged. Listen. Talk to your insurers. Talk to your trades, like the Maine State Chamber of Commerce, and don't shy away from active participation.
Yep, and I'm sure the department will talk more about this next week. Their website, they have a list. They send out periodic newsletters that are. Anytime there's any activity that they are doing anything, they do publicize it, and it's a transparent process. The authority meetings are open, so it is possible to listen in to what they're doing, and they do let us know what's going on. And as Umberto said, engagement is the most important thing. Again, through any process that involves consensus, everybody doesn't necessarily get everything they would like, but making sure that you're engaged in the process is the most important way you can make sure your point of view is heard. And again, knowing that there's a process around it, everything will be subject to review, comment periods, whether, probably public hearing as well as written feedback. So I would expect the department will take all of that into consideration as they are finalizing their regs. So more to come, but definitely participate.
And quickly, either Umberto or Sarah, could you just maybe briefly talk about the coverage of intermittent leave and what that means for the program overall?
Sarah, Kristen, that's in your wheelhouse.
Kristen, you want to take that one?
Yeah, sure. So I will say that intermittent leaves are typically covered. How intermittent leave is administered is typically defined during the rulemaking process. Each state develops its own rules around intermittent leave. And so, you can expect kind of more details around how that will work as rulemaking progresses.
Awesome, thank you. In regards to employer contributions and private plans, many businesses are concerned they will end up paying into the fund without any method of recouping their money should their plan be subsequently deemed a substantially equivalent plan. Would you maybe, I know you touched on that maybe briefly with the letter of intent, but maybe.
Yeah, I think, we can speak to some examples too. Peter's getting at exactly what the heart of a declaration of intent process seeks to avoid, and that's mutually beneficial. The state having to take monies, which is really complex and complicated process to then send back if private plans are later approved. And of course, employers would prefer to have their plans all set and ready to roll before the contribution start date. Can't speak specific to Maine because the DOL will determine how they're going to approach that. But maybe Sarah or Kristen, we do have, I think, some examples, maybe Colorado or other states that have done this with the declaration process or not, that you could speak to.
Yeah, so I think something that's really important to recognize and call out is that an employer's existing leave policy or STD policy, generally speaking, is not going to be deemed a substantially equivalent plan. There are quite a few differences between what an STD policy may look like versus what a paid family and medical leave program looks like. The eligibility thresholds are typically different for these plans. So if you think about your short-term disability policy, there's probably a minimum number of hours that need to be met for an employee to be eligible under that plan. The eligibility threshold for the Maine PFML program and for other state programs, usually it's dependent on reaching some type of financial eligibility test. The coverage reasons are also different. Most of the programs cover serious health conditions. Your short-term disability policy has a specific definition of disability. So these truly, from a private plan perspective, carriers have to develop a product that meets each of the statutory requirements. And that is where the rulemaking around private plans becomes really important with that opt-out process. In Massachusetts, they did the declaration of insurance, which was a checklist that each carrier was able to submit to the state, confirming that yes, their product would meet all of those state requirements. And employers then were able to submit a declaration of insurance to opt out of that program prior to the contribution begin dates. A similar concept was rolled out in Oregon, albeit it was a little different because each state does develop their own rules around that. In Colorado, the process that they used, they actually had employers pay into the state and then they had a refund process, which is not something that as carriers we recommend because we have seen the challenges that it has caused for employers in kind of returning those contributions to employees. So it's been a bit challenging. When we look to Massachusetts and Oregon, we look at those as more successful states in terms of what they rolled out from the opt-out process. And Sarah, I don't know if you'd have any additional context to add there.
No, that covers the landscape.
Awesome. Thank you, Kristen. Would you folks be able to provide examples of how employers have used paid family and medical leave programs in coordination with richer disability plans?
Sure. So, generally speaking, and again, this is generally speaking, private short-term disability policies typically offset for statutory benefits. What we have seen, especially in states where maybe the duration of the paid medical and family leave is quite a bit shorter, they are using short-term disability plans to kind of enhance those benefits. So that comes into play when you think about your higher wage earners, and maybe the state program isn't quite meeting the same threshold as what their disability coverage would provide. When you look to a state though, like Massachusetts, they provide a 20-week paid medical leave bank. And for some employers, it may not make sense to continue to keep their short-term disability coverage because it may only provide a minimum benefit. And so really what employers have been doing would be working with their representatives directly at their private carriers to determine which is the best option for them. Do they want to enhance their short-term disability plan to enrich benefits and provide a greater benefit? Or is it something where they feel the state plan for their employee population provides sufficient coverage? And then, you know, they may terminate their short-term disability coverage. It really does depend on what the employer is looking for in terms of providing those benefits.
Well, that's just it. He really didn't answer back. He just said that should. In Ginny's email, she said first.
Hey there, Julie. Just wanted to let you know you're not on mute and we can hear you there. Sorry for the interjection.
One thing just to add on what Kristen said is that in each state, to really reach out to your carrier if you are thinking about a private plan and to look at STD options, regardless of whether you're in the state plan or the private plan, since due to the existence of the PFML on a mandatory basis, providing some similar benefits to an STD plan, depending on different scenarios and what's going on with your policy, the rates for STD may go down since it often does provide additional coverage for longer durations, usually up to 26 weeks for the short-term portion, and then long-term will pick up thereafter. So it really is, it's a good time to have a conversation with your carrier to kind of talk about existing coverages and how the two programs work together, since, as Kristen mentioned, the STD benefit is an offset while the PFML is running, but once the PFML exhausts, then disability goes back to 100% of a disability benefit, whatever percentage of wage replacement the employers were providing to their employees through their program. So it presents, again, a good opportunity to check in with your carrier about what's going on, to really look at your coverages and make adjustments before the program goes live.
Yes, and I will say that the majority of carriers do proactively review their enforced STD block to make any of those necessary rate adjustments to account for the offsets of the PFML program.
I think Lynn's question was maybe answered kind of within that question. So I think we're probably all set there. And then the last question that I'm seeing in the chat, will there be an attempt to place greater guardrails around how long an employee must be with an employer before being eligible to leave? The law does not place any time limits beyond job protections.
Take a stab, Jake. I think Peter's question is out of our purview as insurers and private plan carriers. We'll leave that up to the legislators and the regulators, but I understand the intent of his question, which is right now in the statute, there is that 120-day job protection clause. You have to have some sort of tenure in order for an employer to be bound to keep that job waiting for you when you return from leave. But there is a financial eligibility clause that allows individuals to bring earnings with them from employer to employer. For example, if you worked at Unum and you then started to go work at Sun Life, you probably brought your earnings with you, but you don't have your 120 days just yet, depending on when you take that leave. So I understand the intent. It's not in the statute right now, and it is definitely not our place to comment on if that's a good policy or not. We'll leave that up to the regulators.
Kind of figured that was going to be your answer, but wanted to throw the question out there regardless for overall kind of completion's sake here. I think, just taking a quick scroll through the chat here, that will be it for the questions in the chat. We are at 5 to the top of the hour here at 11. So I really want to thank all of our participants here today, Sarah, Kristen, Umberto. Really appreciate the amount of information and kind of outline that you gave for what other states are doing. I think it'll be really helpful to those on the call to just kind of get a sense of what those other states are doing and how these other plans have really kind of played out. And thank you to all those in the chat that did participate and ask those questions. Really appreciate the engagement on the question and back and forth level of things. Also want to thank our sponsors again for their support with this webinar series. Cross Insurance being the premier sponsor for our webinar series. Much thanks to them. And then lastly, as it has been mentioned, there will be part 2 to this webinar series next Monday at 10 a.m. When we will be hearing from the DOL in regards to the Maine specific process of how the state is going through their regulatory period. So again, thank you all for attending, and I really appreciate the conversations that were had. Like was stated, this was recorded, and you will be able to watch this after the fact as well for any of your specific employer fact-finding missions as we navigate through this process. So thank you to all, and look forward to seeing all of you for next week.
Bye-bye.
Thank you, Jake. Thanks, everyone.